You can almost feel it, right? The tech world is kind of holding its breath. After a year of just explosive AI-fueled growth, the engine seems to be sputtering a little. Capital's shifting around, leadership is in question. So what's the deal? Is this the end of the road or just a quick pit stop?
Look, most people just watch the markets go up and down. This channel is for people who want to understand why they move. If you want to stay ahead of that curve, go ahead and subscribe.
Yeah, this is the question on everyone's mind, isn't it? It's all over the financial headlines. We've seen those high-flying tech stocks, especially the AI darlings, suddenly take a backseat. Money's flowing into other places, and at first glance, it really does look like a big flashing warning sign. But is it really?
Okay, but what if we're all looking at this from the wrong angle? There's a really powerful counter-narrative out there that suggests this isn't a collapse at all. This quote, man, it just nails it. The market isn't destroying value, it's just digesting. It's taking a moment to process the massive gains from last year. And believe me, that difference is absolutely everything.
All right, so let's get into it. What is actually happening here? Look, this is not some mass exodus from tech. It's what the pros call a market rotation. In any healthy cycle, money moves around between sectors, but that doesn't mean the old leader is finished for good, not by a long shot.
And to really get why this matters, just look at this chart. Tech makes up a huge piece of the pie. We're talking 1/3 of the entire S&P 500. I mean, just the Magnificent Seven, Apple, Microsoft, Google, the usual suspects, they alone make up over 31% of the index's value. The whole market is just deeply, deeply tied to this sector.
And this next idea really drives the point home. Think of the big tech companies as the market's generals. An army doesn't get very far without its generals leading the way, right? So this idea that the rest of the market is just going to charge ahead deep into 2026 while tech sits on the bench, it doesn't really hold up when you look at history.
Okay, so if it's not a total collapse, what are we looking at? This is where we have to get good at separating the real signals from all the panic noise out there. Because once you start digging a little deeper, the whole bursting bubble argument starts to look pretty shaky.
This comparison here, it really sums up where we are. See, real market tops, the big ones, they're filled with this crazy, wild euphoria, that fear of missing out, or FOMO. And honestly, that's just not what's happening right now. Instead, what we have is this wall of worry. Investors are cautious, they're skeptical, they want to see the proof. And funny enough, that skepticism, that's actually a sign of a healthy market. And that proof, it's right there in the fundamentals. Let's be clear, these companies are not backing down. I mean, you've got Meta literally trying to secure nuclear power for its AI data centers. Nuclear power! TSMC just posted really solid sales numbers, which tells you demand is still there. And Nvidia, they're already talking about their next big platform, which is on track for 2026. These guys are planning for massive, massive scale.
And it's not just the public companies. We're seeing huge bets being made in the private markets too. Just take a look at this number. Even with all the new competition popping up, OpenAI is reportedly raising money at a staggering $750 billion valuation.
Even if you're just looking at the charts, they're telling a story of resilience. The price patterns in tech are still making higher lows and higher highs. That's a classic sign of strength. This isn't what hidden stress looks like. It's more like momentum is just taking a breather, It's cooling off, not breaking down.
But out of everything, this might be the most telling signal of all. The insiders, we're talking about the executives, the directors, the people who know their companies best, they're not dumping their stock, they're buying, they're accumulating shares, and they only do that when they think their stock is a bargain. That action speaks volumes. It tells us they think this whole rotation thing is just temporary.
So when you put all this evidence together, it kind of forces you to look at things a little differently. What if this isn't something to be afraid of? What if this whole pullback, this caution, is actually an opportunity? An opportunity in disguise for anyone who's really paying attention.
Well, check this out. According to Morningstar's analysis, the tech sector is now trading almost 10% below what they consider its fair value. We really haven't seen that kind of discount unless there was some major stress event happening, like the bear market back in 2022. This doesn't scream market top to me. It looks a lot more like a potential bargain.
And let's zoom in on the poster child for this whole AI boom, Nvidia. As you can see on this chart, its forward PE is sitting right around 26. Now, look at the bar right next to it. That's the median for the entire tech sector, around 25. They're practically the same.
For the company that's literally at the epicenter of this revolution, that is not some crazy out-of-control valuation. Not at all.
And that valuation? It's backed by some absolutely mind-blowing fundamentals. Nvidia is on track to generate over $200 billion in free cash flow by fiscal 2028. Think about that. Profit margins getting close to 50%, the amount of cash this company is going to be generating is it's immense.
And hey, this isn't just about Nvidia. Wall Street is still betting that the whole Magnificent Seven, Amazon, Tesla, the big guys, are going to grow their earnings by over 20% a year for the next 3 to 5 years. They're the ones with the cash and the infrastructure to actually turn all this AI hype into real, cold, hard profit.
Okay, so let's tie all this together. What does this mean for what comes next? Well, look, it's not a sure thing. There are definitely some real-world risks we have to keep an eye on. But the big economic picture, it still looks pretty supportive.
We absolutely have to be realistic about the risks on the horizon. All this geopolitical tension, that's not just background noise. Things like uncertainty in foreign policy, shifting global priorities, those things could definitely shake market confidence. These are real headwinds, and we've got to watch them closely.
But on the other hand, the economic backdrop here in the US is providing a really strong foundation. Unemployment is easing up, consumer confidence is off its lows and has bounced back, and inflation seems to be under control. So, as long as we're not heading for a deep, dark recession, the market still has room to run.
So if there's one thing to take away from all this, it's this. This market reset we're seeing, it's not a sign that the AI story is falling apart. It's more like a necessary pause. It's the market taking a breath, consolidating, and building a stronger, healthier foundation for the next big leg up.
And that leaves us with one final question to think about. History tells us that when you've got this mix of lingering skepticism but strengthening fundamentals, the market usually isn't about to close the curtains on the show. No, it's setting the stage for the next act. So the real question for all of us is, what's that next act going to look like?
Most investors are going to spend the rest of the year just chasing headlines and reacting to fear. But the real edge, the real alpha, is in understanding the underlying structure of the market before it becomes common knowledge. So if you want to keep your focus on the signals that actually matter, this is where we do that.